How will rising interest rate affect property? The interest rates are spiking. Will this affect our residential market? If so, which market segment is most likely to be impacted? And when will the spikes in rates hurt? Hi, I'm Adrian and in today's episode of Real Talk, I'll be talking about the impact of rising home interest rates on the housing markets. For the past 3 months, there was a sudden increase in buyers locking in their home loans rates before it increased drastically. So who will be the most affected and the least affected? Home buyers who take a maximum housing loan or hold multiple properties with an unsteady income are the most affected. And home buyers who own a single unit, especially those with dual income, will be the least affected. Home buyers must adhere to the total debt servicing ratio, the 3 months compound SORA rates, which was around 1.3% earlier in July 2022, which translates to approximately 2.1 to 2.3% floating loan rates. The floating rates is below 2.5% in the second quarter of 2019 and is the highest interest rate recorded over the past 10 years. How will the rising interest rate impact different market segments? For HDB resale and BTO flats, most of the first-time borrowers may prefer to take HDB loans since many fixed rates bank mortgages has raised above HDB loan rates. Those who have already applied for private loan and those who are ineligible to take HDB loans. The sudden increase in the interest rate may still be manageable as the quantum for flats are not usually high. The sudden increase of rates may not have impacted new home sales. Home buyers may not feel the increase in the monthly installment due to the progressive repayment schedule. For new launch private properties, the home loans tend to be lower in the initial repayment schedule period. However, for other private homes, the mortgages will increase in tandem with a more significant loan quantum due to the rise of interest rate. When will the rising interest rate hurt? The rise in interest rate may impact when rates move above 4%. The interest rate used as a threshold for the bank's TDSR calculation from 30th September 2022. Nevertheless, our market may withstand the interest rate impact better than those in many other countries as speculative activities are low. Many safeguards are already in place to ensure most borrowers are not over-leveraged. For home buyers who have purchased property for investment, the rental income can offset the mortgage increase after the temporary occupation permit, the TOP, since rental has been on an uptrend in the recent years. It has been a pleasure sharing with you on the impacts of rising interest rates on the residential market. Over the years, I successfully assist many of my long-term loyal clients to achieve their financial portfolio goals through real estate ownership. I'd like to extend the warmest invitation to you for us to connect together over an in-depth discussion session for an assets progression master plan. I'll be sharing with you our professional advisory on the trending market insights and movements, and also our forward projection of the next 3 to 5 years, so that you can start to plan your property investment roadmap detailedly, with a clear goal to achieve above market returns. I'll conduct in-depth research through the search framework and in-depth price analysis and market positioning for your real estate portfolio, which will be in line with the detailed current market research through the elements for you to make precise decisions with your assets. I'll be most pleasure to have the honor to share these insights with you when we meet. So do contact me or scan the QR code in this video to register your interest for a discussion session now. Looking forward to connect with you. Ciao!